This session is the first of many important ones in the next couple of days. We've sort of established over time that investing is easy. You sign a form and you send some money that rests in my account for a short period of time and then goes on to a company, and that's really straightforward. The complicated bit being what happens after that, how you look after the companies that you're invested in, how do you choose where to spend your time, how do you maximize that portfolio, and that's really the focus of the rest of these next couple of days. So this session, we're going to have the main presentation by Brian. Those of you who were at dinner last night have had been forewarned that this is structured around the concept of investment as an extension of promiscuity. So if you weren't already on the edge of your seat, you are now. And then we're going to simply bring up three of our local investors representing a few of the different clubs, talking about their approach to managing portfolio, and then asking for questions from you guys to really compare, contrast, and see how it fits together for you. So I'll hand directly over to Brian to take you through the content for today.
Thank you. I mean, coming to New Zealand is very special. I've been wanting to come here since Tolkien, wrote his books about, 40, 50, 60 years ago. My wife and I, Carol, have been traveling for the last 4 or 5 days up from the south to get here. You're a remarkable people. You're a remarkable country. My new sweater made out of possum, I guess, and some other sheep material. We're learning to shear sheep yesterday. I'm honored, we're honored to be here. Thank you, Suze. Thank you to all the other team people who have put this together. I've had the honor also of being an angel investor for about 30 years. Back, as I said last night, when it was called Stupid Investing, and yes, I'm a brash New Yorker, but I've got a lot to share with you. And I'm going to try and share a 2-hour presentation in about 30 minutes. It's lots of pieces that all add up to one conclusion, and you'll know what that conclusion is at the end. I'm an honored professional angel investor, but I'm here to share with you the things that I've learned having a place in Silicon Valley for 20 years, being in New York as the chairman of the New York Angels. This is the New York Angels organizational chart as a member-led angel group. It's about connections to the universities, it's connections to the government, it's connections to every facet of the ecosystem. Some of the reasons we do this is building the startup ecosystem. That's why I do it too. But the number one reason I do it is to get filthy rich, right? And that, I say to some people I just spoke to a moment ago, is the only reason you should do it. And the other added value of the personal elements come out of that is important. But it is to become rich. That's number one. And why? Because if you don't, you stop. And I'm going to touch on that. So I can't spend a lot of time talking about a lot of these slides, but I'll do my best. So I ended up writing a book from Agora Hill. Having been an entrepreneur and started companies with my wife over a number of years, we've been able to be entrepreneurs. So we speak from the heart, we speak from the mind, we speak from the soul. So when we talk to entrepreneurs and we understand what it was like, it's a great aspect to be able to do that. Most of the members of the New York Angels, about 150 of us, we've invested about $160 million into about 250 companies over the last 12 or so years. We were the first members of the Angel Capital Association. Most of the members are entrepreneurs. We don't allow service providers into our group whatsoever. You can't sell within the group. You must invest at least $50,000 every year. That's a requirement. And if you don't, you're out. Our membership fees are $3,500 a year. We're very serious angel investors, and I am going to give this talk as a serious professional angel investor. I hope it creates friction. I know I started creating a little bit of friction in the hallway a few moments ago, which I was really gratified about, because if it gets you talking, if it gets you thinking more deeply, the end result is going to be a better, stronger startup ecosystem and more successful exits. You have different issues here associated with follow-on money, which I found out yesterday you only have one really major VC here. That would make it impossible for me to invest in a startup company here, because if they don't have financial investment longevity, what's the point, right? So that means you have to figure out what to do as a result of that. So writing this book was a wonderful joy of love. The preface was written by the company that I invested in as their very first check, called Pinterest. You've heard of them. And he made it all worthwhile for me by writing the preface and saying if I wasn't there, he wasn't sure what was going to happen, how wonderful it was that somebody believed in him. But I did it because I wanted to make a lot of money. Right? So I believe everything is done through the eyes and filter of sex. The context of that is behaviors, why we do what we do, how we do what we do. There are emotional elements about it, but it is all about a happy ending. Happy exit, excuse me. Okay. So one of the greatest angel investors in the world is, I don't know if you know Esther Dyson. This is one of the famous quotes she had. I think most people relate to it. The average age we found out is about 55 years old. It gives us a second chance to have a new family. And then, of course, we have to raise the children, she said. But this is interesting. And these are factoids. And I surprise everybody. And I'm filled with crazy facts. If you want to debate them, great. They all have support behind them. But at the end of all of the work of an entrepreneur in America, 70% of them don't make a dime. Even though they're funded and they go through the pain and the tribulations and the social support and the hugging and the warmth and, gee, we're going to make it great for you, 70% of them don't make a penny. And I have a real strong belief that we should never have funded a lot of these companies, and we put them in this position to grow and be proud of who they are and what they're doing, and we should have told them at an MBA school how to start a company, as well as give them another book on how to stop. Many of these companies should never continue. They should be put out of their misery, and more of our money should go into new and better ideas, okay? We all want a 10X. Right? We all want a 10X. We all look for a 10. But the reality is that's what the VCs get, far less than a 10. 6% of the VCs in America return 95% of the dollars. The VCs don't make money. And I tell entrepreneurs all over the world, gee, you know VCs don't make money? And they all, come on, that's not possible. But it's a hit business. And then we talk about angels, and we have to try and be as smart as the VCs. That's really, really hard, which means we have to be a lot smarter than we think we are. But the return for the VCs is a paltry 2.9 times. Did everybody know that? Did everybody here think that VCs are all making money? Not happening. So we're seduced. There's a seduction element about what we do. We want to be a part of these young kids. I was a media guy. I found it great in the early days to go talk to companies with great tech. That's where I started. And I had a card that said media. Now I got a card that says money, right? And that gives me the keys to go in and hang out with these young people. Unfortunately, it is seductive. We want to join them, and our money is the key to doing it. So I beg you, don't let that be the reason. Don't let that really be the reason. And then there's the deception. We find that we want to be like them. We want to be youthful again. We want to connect with them. That's behaviors, right? It's all about behaviors. Why do we do this? We want to connect with them. I want to go home and tell everybody that I'm hanging out with these 20-somethings, right? How often do you feel that? It makes you feel young. And there's actually a word for it. It's called homophily. It gives us the ability to ignore things that we know are wrong, but we do them anyway because we want to be like these kids. And that's the behavior that we all exhibit. But here, I was explaining this last night to some people. Who believes this? The U.S. startup world has been decreasing for years and years, down dramatically. Why? What's the instruction here? I could spend a long time on this slide. But first, most people, when they see these statistics, go, that's unbelievable. The U.S. is filled with wantrepreneurs. Every kid wants to be an entrepreneur. But why? Why is this happening? Not enough smart kids. Not enough. And not enough angel investors who will support them. There's just only a certain number of angel investors that are available. You're in this room. It's a sad commentary when you start making choices based on all the reasons I told you about and the seductive reasons and allow deception to be your guide. You stop investing, and that's what's happened. And I'm going to talk about that in the next couple of slides. We go for thrills. It's all about thrills. We went to the bungee bridge the other day. I didn't go on that bridge. We didn't have time. But we do it to be thrill seekers. But unfortunately, thrills don't create great returns. No matter how hard we pray, no matter how much we talk to our startup founders, it doesn't matter. It's not about the thrill. Overall investment trends continue now in the United States. I'm the canary in the proverbial cave. It's going down. It's going the wrong way. I'm not a negative soothsayer. This is not opinion. Everything I have here I've shared in my talks throughout Europe, in my talks through Israel, And by the way, in Israel is where they get this. I give this presentation, standing ovation. Oh my God, we're in it for the money. Sounds like a cultural thing, but Startup Nation in Israel has more angel investors being created because more people are making money, and more money is then being invested into the startups. The rainforest must grow. You're a rainforest. Don't sprinkle, don't tinkle. Really make strong-hearted decisions about where and how you place your money and all your bets. Size does matter. You know, unfortunately, valuations continue to go up, but the exit numbers don't. The number of venture capital firms now that are finding out that they're not making money and they're getting scaled back because they haven't been able to prove to their LPs that it's a worthy investment class is dramatic. The micro VCs, because everybody thinks they could start a venture capital firm, is growing at sub $50 million, right? And they're the ones, unfortunately, that are allowing a lot of the valuations, inexperienced venture firms, allowing a lot of those valuations to go up because a lot of them see it as binary. Now, Brigitte used the word, or somebody used the word, it's a lottery play. I don't believe that. But in the United States, those numbers of valuations have gone dramatically up. And again, the exits don't change. Angels continue to be sort of moderate, but they're continuing now to go down. Here we go. Seed stage companies are going down. Now, yes, it's a pendulum. It's swinging back and forth. But there's a limited number of angel investors. Even at the New York Angels, we've got 150 investors, and they all have to invest $50,000 a year. Our deal flow is between 200 and 500 companies a month, depending on how active you want to be. And if any of you, by the way, want to have an opportunity of looking at our deals, that's great. We encourage outside organizations to look at the things that are going on in New York, and we tend to, as angel investors, be very provincial, right? We only invest in our communities, we only invest in our countries, we only invest in sometimes our own nationalities when we're not even living in the country. But I think it's healthy for an angel investor to look outside their world and just say, I'm an angel investor and I'm looking to make money wherever I can find it. Right, so again, venture capital is going down broadly. And these are all new numbers. Angel-backed, too many business VCs, right, won't touch. So criteria number one, if you know you're not going to get the company backed by a VC when you need growth capital, why are you doing it? And yet, you're a young country and you don't have that ecosystem yet. I put to you that you know this, and I learned this last night talking to a number of you who said, we're going to put money into the company, but the company is going to end up just doing this because they don't have the money for the VC support. I said, and are you fixing it? And people said to me, we don't know how. Fix that. Fix that. How? I don't have all the answers here today. But I think you may be able to pool your money in a different way or work with corporations. Because if you don't fix this and there's no VC support for the growth stage of the company, of course you're not going to succeed. Of course the company isn't going to exit. Are you just blind, not thinking through this? You need follow-on capital. You have to fix that. Oh yes, well, that's the other thing about the entrepreneur community. These are, real stories that have been talked about that, particularly in Silicon Valley, somebody even, proposed making prostitution a perk. I don't know how well that went over, but they talk about why there are so few women in the corporate environments of big tech companies. And the answer is it's because most of these guys are nerds and they're very uncomfortable around women. So you don't have to get too deep about it. So angel investors even apologizes for using this as a way to get more sex. So which angel are you? 90% of the angels in the United States are recreational tourist angels. Kind of looks like it's fun, kind of looks interesting. Believe me, they're not much different than anywhere else in the world. They do it because they want to try it. It's interesting. Maybe they'll get lucky, right? But in the end, you are, as some people said last night, a philanthropic angel. Sometimes you get hoodwinked into it because you're also mentoring some startup, and you can't say no to them. They need money, and what are you going to say? No. They'll start melting in front of you, right? How dare you? So we're brought into this, and we end up having to be sort of the support structure for a company we know shouldn't receive the money. Hopefully, you're all wanting to be professional angels. Seed stage capital continues, and this is a result of groups. I believe in angel groups. I think angel groups is the wisdom of crowds. Everybody should openly debate it. But at a Harvard Business School angel group the other day in California, too many of the angels in the room started asking too many good questions of the entrepreneur on stage. And the entrepreneur was sort of befuddled. They didn't have the answers. So you know what they did? They didn't allow questions anymore because it stopped people from investing. This was the Harvard Business School angels. Their goal was investing, not smart investing. So they stopped asking questions. They put them at little tables so they could ask their questions quiet, without anybody else hearing. You must demand among yourselves that kind of interaction, because we're all mature people. We can handle it. Now, there's also this belief that we believe in poor performance. What is that? Out of 10, 6 are going to fail, 2 are going to maybe break even, 2 will give you 2 to 3x, and there's the hit, right? Why? Why do we believe that? We don't have to believe that. I think we can believe that we can have a higher percentage, but if you follow professional level angel investing requirements, you will get far better numbers. Angel exhaustion is real. Fabrice Grinda, I don't know if you know Fabrice, he's probably the #1 angel investor in the world. He goes and attends a Y Combinator meeting. Anybody here ever go to Y Combinator in California? Well, you sit there in an audience and you have a clicker and it says will invest, will not invest. Presentation is given, you're, I don't know, 500 people in the room, 1,000 people on the phones listening in on a stream, and right there the presentation is being given and you have to hit one of them. Will invest, won't invest. And if you hit will invest, you have to or you're not invited back. Right. That's what Fabrice continues to see, and that's what he's pointing out. This constant, I've got to make it happen, I've got to act, I've got to do something. By the way, we talk about how hard it is for us. The leading accelerator in the world that people generally know most is called Techstars, right? You've all heard of Techstars, right? Yes? Yes? Okay, good, okay. Well, can anybody here tell me, so they curate the number, they curate the most companies, they have the best access to deal flow than anyone else in the world. They just changed their model, by the way. They now will take you in at Techstars, but at the end is when you have to commit to taking their money. You don't have to. That's how hard it's gotten for them. But can anybody here tell me one company that's come out of Techstars that's been successful? A big hit? You would think, right? Techstars #1. Best curation, best opportunity for investing. Can anybody tell me one company? Not one. So, we're in good company. It's hard for them and it's hard for us. So we tend to, of course, look at due diligence and we ask ourselves, how much do we need? Well, we prematurely invest for the most part. We don't know how to do due diligence well. You know, I consider due diligence, the kinds of things that you do to make things happen, not to make things happen. Oh, yes. Then we've got, so again, this is just a reflection of reality. I study and I look at all the baiters. I call them all masturbators. You know, 30 days, 60 days, 90 days into one of these organizational sort of mills, and they're not even really designed to help you build your business for the most part. They're designed to help you create a presentation to raise money, because if you don't do that, if it isn't focusing on the raising of money, it doesn't matter. Because at the end, it's all about the showtime, right? It's all about getting people to la la la, up on stage, and then to get that check coming in. Very sad. There is a change, however, in the United States. There's a wonderful incubator. It doesn't take any money. They're part of a large business real estate play, and they're in a big office space. They charge no fee, none, and you're there for a year, 1 year, as opposed to most baiters that you're in for 90 days and you're out, and you're on your own. Pretty sad. I have to talk about crowdfunding. Down the line, so I looked at, the crowd cubed in England. Very sad. It's a bloodbath. But I do believe and I understand the democratization of capital. Everybody wants to believe that they should be an angel investor and have the right to. I just learned that you also have accredited investors here that, like in the States, we're, supposedly the ones who know who to invest in. Right, sure, right? So I do understand how others want to be a part of it. I think we're in the Wild West. We're a big petri dish. Everything is sort of being figured out as we go, but it doesn't work. My research shows that half of the investments that angel investors make, they regret within 6 months. I don't have to spend any more time on that slide. Right, and without due diligence, it's unprotected sex. You don't know what you're getting. Do you all have due diligence teams? Great. Do you employ MBA students to come in and work with you? Young people to help you in your due diligence teams? No answer. No. So here's what we've learned. We take the best and the smartest MBA students from Columbia, NYU, and other universities in the New York area, and we called them future angels. We made them part of our due diligence teams. Why? You can guess why. 5 more minutes? Okay, really fast. Okay, because we needed to see through their eyes. We had tired old eyes, right? It works. They look at some of the deals and they tell us things, we go, oh my God, we would never have known that. We would never have seen that. So create an infrastructure of young people. We were talking about a startup community, right? We're talking about reaching out and building a stronger ecosystem. Bring some of these brightest of the bright financial students and MBA students and have them participate with you in your due diligence analysis. Have them, start writing some of those memos with you and asking brighter questions than we know even to come up with. Not every good idea is a scalable, exitable business. I only look for a company that can get me 20 times my investment. 20 times, that's it. That's it. If I don't get that 20 times, I'll take whatever else I can get, but I still have a better chance of getting something if I think the company is going to give me 20 times. When I gave this presentation at EBON last year, I asked a bunch of the angel investors, did they believe in that? They said, we don't even believe in the companies we're investing in, but we need to be angel investors, so we need to invest in something. You got that? Okay. So my friend Dave McClure believes in this. Spray and pay. Nobody can pick and choose. Brian, come on, get off of it. Don't talk to everybody about how smart they should be. They should be professionals. It doesn't matter. Nobody can pick and choose. So just build a large portfolio, invest in everything. Government. The big problem with government is, I was talking to Brigitte about, is that they get involved. And particularly in the UK, and particularly in Europe, where it's a pretty sad situation. But in America, we think government creates all these betas, all these places where startup companies go. And I go in and I'm asked to see if there's anything I'd invest in. I say, there's not one company here. Who chose these companies? They don't have any chance of real long-term success. But in Detroit, where they figured, we're going to fix this. We're going to have a startup community. We're going to create jobs. We're going to build into the infrastructure a financial opportunity for investment. And Detroit is saying it's not working. It's not angel investing. It's economic development. There's a big difference between economic development and angel investing. I'm seeing a lot of smiles. This is the most important. I was talking at Columbia University about 2 years ago, and at Columbia University, I wanted just to check out a thesis I had. And the thesis was that we're being too nice to entrepreneurs. You're such a nice entrepreneur. Your mother should be so proud of you. Your dad, he created a great son. You're an entrepreneur. Do you know what? We're doing more damage supporting these kids as entrepreneurs. You think that's a horror thing to say. Brian, how could you be so rude? How could you be so mean? Not every kid is destined to have the ability to be a great entrepreneur. And we tell them they can. We almost force them today to be wantrepreneurs. They feel guilty if they're not. But we have to actually have tough love. We have to say, you're not destined to be an entrepreneur. It's not going to work. You don't have the abilities to do it. And as I said to you, the biggest reason why America is suffering now from lack of startups is because there aren't enough smart people to build these companies. Tough love. And I found that at Columbia University, speaking to their brightest, when I asked them, are we being too nice to you? They said, yes, you are. And we resent it. Stop being so nice to us. Our term sheets should never, ever include a convertible note unless it's used properly with a bridge associated with it. Brigitte was talking about follow-on rounds being the most important. If you have a convertible note, it doesn't give you the right to have a follow-on round. If you have a convertible note, it doesn't give you the right to have information rights. If you have a convertible note, it doesn't give you any rights. Investors have gotten so lenient because I just want to give you money, and it's easy and simple, and the lawyers have made it so that it's cheaper, but not righter. Convertible notes, and we had this debate with John Houston last year, at the ACA conference, have really hurt the startup world. They need boards, early boards. 20 seconds, okay. They need boards, they need early. It's like training wheels. A young company with a board is a lot smarter and more opportunistic to get an A. So just say no. Passion sucks. We talk about the word passion. It's a misused word. Passion blinds you into thinking, look at the kid, so passionate. Passion is nothing. It's like gas going out of your body. I was passionate, says the kid, a couple of months ago, but I stopped being passionate about it. I wasn't sure anymore. Well, what about your frigging business? I just gave you $500,000. You told me you were passionate 6 weeks ago. I don't know, I don't know. So I just look for startup entrepreneurs who say, I got a business, I got a need, I got a customer, I got more customers, I'm building a business to support them. Screw passion. Grit, determination. Passion is blinding. Faking it. It's all over the US. We put more money into these unicorns now just so that you can build an LP portfolio who says, look, I got a unicorn, you need to give me some more money so I can create more unicorns. But in America now, it's the down round when the company goes public. When they do, they're getting actually less money. And with all the preferences that they're adding on to a lot of these companies, because the ladder money wants all these protections, it's a nightmare. Lustful investors have continued to create the problem. The numbers continue to now go the wrong way in America. Less seeds. It's an execution game. Anybody not know that? Leave the room. Right? It's an execution game. I'll take a pretty so-so idea with brilliant execution anytime over a brilliant idea with so-so execution. When I look at a company, I ask them, can they execute? That's the due diligence part you have to add into your due diligence. Do you believe that they can execute? I know I'm being told to get off. All right. So here, fixing it. Angels must do a greater due diligence. Now, I'm an optimist. I'm a real optimist. I am honored to be an angel investor. I can't imagine doing anything better. I do due diligence. I look for all the reasons first to do an investment. DUE is the reasons not to. I look for all the reasons to do it, and I'll peel that back until I find something that gets in the way as a fatal flaw. I know that a VC must invest. If there's no money for the VC to come in later after I put the money in, it's going to be seed investment. I heard this happen to all of you. Seed investment, seed investment, seed investment. That has to be fixed. You have to figure out a way of doing that collectively. Angel groups being syndicators is one thing, collectively working together to fix these problems. Maybe you have a committee at this meeting on how to fix that problem. Right? Otherwise, you're not going to go anywhere with these companies. But you have a bluster, the minister is going to come in, say everything's going to be great, we're going to fix it, it's all good. But in the end, it can't be if there's no fuel, if there's no money. Only invest in truly big exits. That's critical. You should stop and say, is this a hit? Is this a big business opportunity? Rather than, they're so nice and so sweet, and who knows, maybe the milk thing will work, and I don't know, but it'll be nice to sort of invest in them because it's a good thing. It's a bad thing. If angel investors don't make money, you stop investing. I spoke to a couple of the angel groups here, and many of them are getting to the point where they have dry gunpowder. Dry gunpowder is happening in America too. Improving luck. I think luck can be improved. Luck is a critical component of how we operate in our business. Luck has everything to do. Meeting luck halfway, my wife likes to say, is the critical success factor. Meeting luck halfway, creating luck. I gave a presentation on that last year at the ACA, and it was wonderful to talk about it. Wisdom of the groups, really share and debate. Share and debate a lot. Do it full time. I know you can't all do it, but you've got to look at a lot of deals to make sure you find the right ones. Dramatically increase your deal flow wherever you can get it. And of course, align with the founder on an early exit. Because when people ask me, what business am I in? What business are you in? Some people joke about it and they say, Brian, that's a silly question. We're in the investment business. I come back and I say, no. We're in the exit business. Build the exit in the day you meet with the a young investor. And on your boards, when you meet with them, 10% of that board time should be discussing MBAs. Even the first day of that board meeting, you should build that in because it's a strategy. On that note, I guess I'm going to...
Thank you, Brian. Obviously, we could do with an awful lot more time to talk about these things, but right now I'm going to bring up to the stage the chair of Angel HU, Trevor Dickinson, the chair of Ice Angels, Kerry McIntosh, and a member of Ice Angels, board member of Ice Angels, and member of Archangels, Dana McKenzie. So please come grab a stool. And we're going to pass this one back and forth amongst you guys. We'll come out for broader questions shortly, but just starting with you because you're nearest, Trevor. Give us a couple minutes on your approach to investing, your approach to building portfolio and your involvement, and maybe reflecting on any of the standout points from what we've just heard that resonate with you.
Well, follow that, unfortunately. I feel like the comedy relief now. Okay, well, I've been an angel investor for 5 years, and I kind of lucked into angel investment. I went through, like many in the room, my own exit, 2004. Built a company over 14 years with a group of partners at $100 million exit. Sailed the boats, flew the planes, got bored, came to New Zealand, and got involved in angel investment. And initially, I was spray and pray, as Dana once said to me. And more recently, I've been focusing on the sort of things that made my company successful, which was a good, diverse team, which was a real business plan, which was a potential exit solution. And with my, I have to say, I am now thinking more about social impact investing because I'd like to save the planet. I blame my daughter for that. But I still think that anything I invest in now must have the potential to be a profitable business. And it could be profitable in its own right. And it could just be a lifestyle business. We all say, oh, a lifestyle business, who wants that? But having seen what Bridget says in Switzerland, you can sell your shares to other investors. I don't think there's anything wrong with a lifestyle business. We'll sell it back to the founders if they're making money. So I'm all about trying to improve. Well, I do get the enjoyment from being an investor, and I do like dealing with young people. I think it's great. It keeps me young. And I do like keeping up with new ideas so I don't get old fuddy-duddy. And when Deborah showed the group, I think I was at the upper end of that age range. That was starting to worry me a little bit. Next year, I'll be over it. So anyway, that's why I wanted to say my investment. I'm in a number of investments which are not angel as well, but my angel investments are probably over 50 now. And I've probably committed far too much money, probably $2.5 million in those investments. Follow-ons, you got to expect them. It always takes more time, it always takes more money. What we need to learn to do, 2 years ago we talked about exits. I don't think we've improved it since then in New Zealand. What we need to learn to do is to shut down the dead wood quicker. So we're not using our own time, our own money, and wasting the entrepreneur's time. Let them start something else up, and which will probably be successful second time around. And if you're seeing that quote on the desk there, there's one by the founder of, and I took a photograph of it. Who is it? The founder of PayPal. And you don't get it right first time, or second time, or third time. It's a bit like Monty Python. I built this castle and it sank, and I built it and it sank, and I built it, burnt down and sank. We need to do that. We need to find the ones that won't sink, the ones that will be successful.
Thanks, Trevor. I nearly had I probably was the one that caused the friction with Brian right before, because he does raise a number of points that are quite provocative. But just a bit about my background. So I started investing back in Switzerland with Brigitte, and then helped her set up the first chapter of the Go Beyond organization in Paris. 3 years ago, I moved to New Zealand and reached out to Ice Angels and learned about the ecosystem here. In total, I have about 14 investments, and the last 6 were made in New Zealand. And I've definitely bought my right into playing in the space. I'm not rich, but I was rich enough to be able to afford a percentage of my net assets to go into high-risk projects because there's a lot of excitement around them. And listening to Brian is almost embarrassing because you think, yeah, I definitely have been thinking of the criteria that I've had in investing this money at first, quite relaxed and quite naive and quite rather just excited about helping young people. And I fundamentally believe that this is a sector of any economy that is an honorable sector to put money in because it stimulates creativity and helps someone get to the next kind of version of themselves, even if they're not hitting it big the first time. But in recent 18 months, where I started looking at my investments with a different mindset and aiming to escape a little bit the model that has happened in New Zealand over the. I mean, I think I'm very lucky to have happened here at a time when the momentum in this space has reached a real critical mass, and we see the rooms full of people and a lot of investment and a lot of dynamism in the quality of the interactions we have. But definitely we suffer from this going from seed to seed to seed to seed round, which is a disservice to the entrepreneurs here and ultimately dilutes all of us down. So my investment philosophy has evolved into where now I go narrow and deep into specific deals I can screen with a more lucid mindset rather than just the excitement about the people or the idea, and attempt to take them from that seed round in New Zealand abroad, so that the next round will be in market where they need to match kind of the market access with the next strategic investors, and that's been and it's also a chance for me to kind of walk the talk of acting as a lead investor for companies here. So yeah, it's a journey, and I don't know, Brian, if you were that clear about all of those points that now are you just, I mean, it's brilliant. You kind of slap us with them, but I don't know if when you started, they were all such. You had such focus about them, and it's definitely you. So I look at it like I appreciate the wisdom, and I appreciate almost the cynical side of it. But you got to start loving the sector. Otherwise, there is so much pain associated with it that if you don't have that fundamental belief in where you're acting in the economic development of a society, you just don't continue. So.
Well said.
I think so. I think some of the interesting elements there in terms of overlap is the degree to which we are a young market. And when you talked about, what is economic development activity versus investment activity, I think that's really critical. Yeah, and where people have been building a market, I think that approach really probably drive us towards some of those behaviours that we probably shift away from as we mature. Kerry.
Look, my background is probably quite different to most of the people in the room. I have a background which is in investment banking and professional funds management. So when I started looking at the sector in 2013, I've approached it very much as a professional investor might approach something like this. I've tried to take a portfolio approach and identify some key success factors within that portfolio which are going to give me better returns. So when I've looked at opportunities, a couple of quite standard ones, looking at things B2B out of New Zealand. I think it's very hard to build B2C out of the New Zealand marketplace. I've been looking for opportunities which have a globally addressable market. That is, they are big opportunities. And I guess some of the more differentiated stuff is I'm looking for companies that have real products and real revenue, so generally a little bit later stage. And then finally, I've only really backed experienced entrepreneurs or entrepreneurs who are very closely aligned with a lead investor like Adam Clark or Miles Valentine, who can add a lot of value in terms of the journey. So I guess that's given me, some would say that's spray and pray. I think it's a pretty carefully curated portfolio of superior opportunities. And if I look at it, probably half of its first investments, half of its follow on. In terms of the returns to date, it's running at about, and I've got 23 investments, of which 18 are through the angels, and there's 5 sort of outside the angels. I've had one significant realisation. So I look at the portfolio, it's really sort of tracking at about 2 times money, with about a sort of 15% IRR and about 33 cents on the dollar back in cash. So I guess it's early days from my perspective, but I've got some encouragement that the returns are there.
One of your most strong points that you quite vigorously was around the next round and where that money's going to come from to go through. So seeing you guys are on the spot up there, what about a few comments around that from your perspective and how that has or hasn't played out?
What other stuff? I mean, from my perspective, I guess I've had 3 or 4 other companies go through to US venture. I mean, I'm not sure that's a great outcome as a New Zealand angel investor. They have their own requirements in terms of returns, which typically extend the investment profile, the investment length. I'm really looking for guys who are looking for an early exit. Going to be happy with sort of a $50 million return rather than having to roll the dice with US venture. So I think there are those opportunities there. There are plenty of strategics looking at early exit opportunities, and there are sort of other funding opportunities outside US venture. But I guess what we've seen also is a real willingness of US venture to travel down here, particularly out of their Asian offices.
To answer the question, it always takes longer, it always takes more money. So if you're going to invest in a company and you really believe in that company, you've got to realise it's not your first investment in that business. Assuming it meets its targets, you're going to have to put more in, especially if you want to maintain your share in it. In recent years, I've looked at businesses with strong teams. I mean, one Flick Electric, I can put my hand up for that. I was one of the early investors in Flick Electric, and I still have a fairly reasonable investment in that company. I actually invested in the team. And I invested in their belief in the idea, and I liked their enthusiasm. I thought it was great. So that's what I invested in, and I'm really proud to be involved, an early board member in that. I'm no longer on the board, but they're still doing very well. And if you want to know more about it, I always promote Flick. Speak to Varcel. And I am a customer as well. So, but you've got to expect more funding rounds, and we had 3 with Flick, which I invested in each one of them. 8i is another one. I did it for the tech. It was exciting. I'm hopeful that might be a nice exit and make up for all the other exits I've had. Yeah.
I can actually add to that, because this is the first time I'm lead investor for the exhibit, and we just wrapped up a round here in New Zealand. We're looking at 12 months later down the road for the next round, and we are starting. So first board meeting, 10 minutes on exit strategy already, first board meeting. Next, basically, we have a plan in place to understand who are the people we need to build the comfort and the confidence with the company and the progress we're making between now and 18 months' time, when we have to be in front of them to pitch, so that we play to that provincial atmosphere that exists in angel organizations or Uber angels, because it's not enough to come from New Zealand and just show up with a nice, impeccable pitch deck and with the right IM. You have to have given these people confidence that you have been on a path, that they got to know you and they got to believe in you alongside, just like we here in New Zealand would do with the companies in which we end up investing. We never invest right on the spot. So it's that entire process, but doing that away from the space you are in and into in market, it takes a lot of focus as you are 18 months away. So, yeah.
I just want to comment on this. In New York City, we have just about every country arriving on a plane at Kennedy Airport with entrepreneurs, boatloads of them. Just coming to New York, and certainly some go to Silicon Valley, but it's sort of like Hollywood back in the 20s, I'm going to hit it, I'm going to be a star, right? And it's an amazing thing, because in New York City, we welcome everybody to come and try their hand at being a successful startup. So if some of your startups are looking to come to the States, there's great organizations that will help facilitate that. That'll keep their teams and development teams and the things that are cost value-added factors here, but where the customers are and the opportunity for expansion and scaling is certainly where the customers are. Now, the alignment with VCs, really, really important. It used to be in the early days, the VCs would wipe out the angel investors. They would actually create new classes of stock in spite of the fact, I love the fact that we are there first, and one of my chapters in my book is love the ones who love you first. And it's up to the entrepreneur not to let them rub your name out, right? But that's what the VCs used to be when they were called vulture capitalists, right? Not anymore. Now the VCs recognize the added value of angels. Much more, because they don't want to sit on their boards. They don't want to hang out with them the way we do. They have all the LPs they're trying to deal with and saying, what's happening to my money? That's where they spend most of their time, and then raising the next round for the next fund. So angels and our relationship with VCs in America is profoundly important. We work with them, and we have the mentorship support to give the venture community that which their customers need. So we are aligned with them. The only thing that we're not aligned with is they need bigger exits than we do. They can't work on the basis of a 5 or a 10x. They need, at least in many cases, really a 20. But there is an ongoing alignment with the venture firms, and they need us and we need them. And once you establish that and you understand that that's where the growth really happens, it's a beautiful thing.
Quick question. So, follow-on investing, right? We have a company right now. We invested at a $1.7 million valuation. We invested at a $8 million valuation, and now they're raising at a $22 million valuation. And I buy why the board members would back it for the signaling, but why as an angel would you allocate some of your angel capital to a company at a price that high?
You wouldn't.
Well, Brian said you would.
No.
So, I mean, yeah, the company's parrot. I happen to think that, I happen to think that they've created a fantastic, unique and highly valuable data asset. At 23, the company looks cheap. So that's my view.
I'm also a parrot investor. I don't know I invest in this round. Have I, Dave?
Obviously, but yeah, you're in.
Oh, in, okay. Sorry about that.
Last year, Nelson Gray, also in his talk, likened the talk of exits to old men talking about sex. So is it really only New Zealand that angel investing in sex doesn't go hand in hand?
That it's not a new problem, you're saying? I didn't say it was a problem. It's always an opportunity. Right.
All right, before we head into help session, I'm going to have to cut that out. Look, it feels like the conversation's only just beginning, but we've got 2 days to find out more about Rudy's sex life. So this is the perfect place and the perfect time in New Zealand to actually be challenging one another on these things. You see the expertise that's here in the room. Lean on one another. Do be challenging. Do be thinking about these things. And thanks to everyone on the stage for sharing experience and thoughts to help people take things forward. Thanks.
Yeah, I just want to let you know I'm coming back. This is a great country, and I'm excited to be a part of this moment in your history. And hopefully this acts as a catalyst and a wake-up call to do things at a level that you really can, because you're such a happy, wonderful, my wife is commenting, fun group of people who is able to have sort of a laughter about themselves. I do this in a lot of countries, and people are, oh, can't talk like this. What are you talking about? But you all have this greater propensity to be able to be open and transparent about a lot of these issues, which you should be very proud of. Okay? Bye. Okay.